Well, it's time to check in with Rich Nelson of Allendale Incorporated to kick off our trading week here. And Rich, we only have 2 trading days remaining in July. I was talking with John Jenkinson earlier, and tomorrow we only have 5 months until New Year's Eve. My goodness, that's kind of a shock, isn't it, to the system?
Certainly is, especially after it seems like summer's not going on too long here, almost like we just started summer just a few days ago.
Yeah, exactly. So we have a little firmer tone in the grain trade overnight in the Globex market. I want to walk through these prices with everyone here and get your explanation as to what's going on. In the corn trade, looks like we have that September contract about 3.5 cents higher overnight at 365.5, while December new crop was 3.5 higher at 379 3/4. And then you get to the soybean trade, and soybeans had some gains as well. It looks like on the, we'll start with that August contract. It was 4 1/4 higher at 874 3/4. And we have November 5 higher at 890 1/4. I do want to point out on that August contract for the entire soy complex, the August contract goes into first notice day tomorrow, right?
It certainly does, and that's actually a very good point. Not a lot of trading interest in terms of volume in it right now, but certainly it is something to watch very closely here. Okay,
now let's move on to the wheat. Now, in the wheat trade, we had a firmer tone overnight, that's for sure. September Chicago wheat 9 higher at 539.5. In Kansas City, we had the September contract 12 1/4 higher at 544 3/4 this morning. And in the Minneapolis wheat, where that wheat tour wrapped up last week, we have September up 11 1/4 this morning at 603 3/4. What's going to be driving the wheat trade today?
I think actually there are some mild concerns about weather here on the U.S. side, as well as, of course, the continued concern about portions of EU, Australia, and other portions as well. Maybe this change to a possibly drier forecast, a little warmer and drier than what we knew about Friday, might give us a little support for today's discussion here.
You know, I read on the wire this morning where the German Farmers Association is asking for €1 billion in possible assistance due to crop losses for their farmers. Is that more related to losses in wheat or just overall all the commodities there?
I'd look at it in terms of a general grain concern here. One thing about the EU is they will have this drop in production. Last year, about 152 million tons. This year, USDA has them at 145, and our own numbers are down there about 143. So we will have some declines. I think the big question is exactly how much. And keep in mind, these numbers are about 15 million tons off the peak from about 3 years ago.
So that'll definitely tighten up those global stocks, that's for sure. So we'll have to keep an eye on that moving forward. And we're probably within a couple of weeks of our next crop production and supply and demand report coming out. So that will all play into that, that's for sure. Rich, we will come back in just a moment, and we'll see what to expect in our livestock trade. Kind of a volatile week last night, especially on Thursday. And we'll talk about how we finished up last week right after this. Thank you so much for joining us here on a Monday. I'm Marlon Bowling with you, your tour guide to your ag commodities. And on the phone, we have Rich Nelson of Allendale Incorporated. And Rich, as we wrapped up the week last week, didn't really see any cash cattle trade to speak of as we headed toward the weekend once again. So we had some scattered light activity that took place very late again on Friday. That seems to be the norm here this past month. And it looks like on a live basis, the market worked out to be about 112 per hundredweight on a very light trade. And that would translate into a loss of, what, $2 or $3 from the week before, according to your logic there?
From the numbers I have, I had 113 last week, but there were a few sales of some higher prices. So one, if not actually $2, depending on location there.
Okay. Dress basis sales looks like maybe 174, maybe a few isolated hit at 176. So there again, that would be a little under the previous week there. What do you expect to see here? Because in the futures trade, we wrapped up weaker in a lot of commodities. Now, on the cattle, it was interesting where on the live cattle and feeder cattle trade, we had the nearby contracts on both of those closing a little bit firmer Friday, but all the deferred contracts were weaker. And then on the lean hogs, you just had everything weaker to wrap up last week. And I believe, if I remember correctly here, Rich, we made new contract lows again on Friday on hogs.
That sure is right. So this will be a very interesting week here as we prepare for the transition into August. Certainly on the cattle end, a lot of us are waiting on some potentially lower cattle supplies be offered in the month of August, and therefore we're warning about this discount in these futures. Futures right now implying cash will drop down to 108 later on in August. So that's something we'll have to watch very closely here.
And as far as deadlines coming up, it looks like we have first notice day on August live cattle coming up on, that would be Monday, August the 6th. And it looks like last trading day on that August contract on the lean hogs, that'll be coming up in about 2 weeks on the 14th of August. So those are a couple dates to watch coming up down the pike. So anyway, we'll see how everything shakes out. Rich, thanks for helping us navigate the waters here before we get things opened up here this morning. I appreciate that very much. Rich Nelson happens to be with Allendale Incorporated. He is based in McHenry, Illinois.